Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and every week I'm bringing you guys information about everything, all things real estate and mortgage. So today I actually sent out the text message to let you all know we are going to be talking rentals. We've got a lot of clients that have opted to put their home purchases on hold, which I don't agree with, but it has happened. It is happening. That's just part of the wave and the cycles, and they are out exploring rental properties. They are trying to get themselves into rentals. So I did want to bring on a very good friend of mine. Her name is Mary. She's going to be coming on with us. She is not only a notary, so she does a lot of signings for mortgage and everything else, but she is also a real estate agent. She is a property owner, and she is now has an investment property. So Mary is on the phone with us. Mary, thank you so much for joining. How are you today?
Good. Thank you for inviting me. I appreciate it.
Not a problem. So me and you talk all the time. I was just explaining to, my listeners that you are a notary. You've been doing that for many, many years. You specialize really in loan documents, making sure that you're signing the refinances, the purchases, explaining, everything that's happening in all of the documentation that they're signing. But you are also a real estate agent, and you own rentals. You've owned rentals for many years in the past, and now you've just recently embarked on a brand new rental purchase. And you and I were just having this, conversation, catching up, how are things? And you started telling me about the experience that you had. And I feel like I keep preaching to the choir about how people need to buy. And so I just thought that the conversation that you and I had was really, really important for people to hear. And I wanted them to hear it directly from you. I kind of gave a little bit of a rundown in last week's show, kind of preempting today's show. But I feel like it comes across better when you're the one that experienced it and you're the one that's telling the story. So the first thing that I want everybody to realize is that right now in today's market, if you are searching for a rental property, you have been out there trying to find a new place to move to, you may be having a difficult time securing a property. And that is because, there's a small inventory, right, Mare? Like, have you looked to see how many properties are, available for rents? Is it similar to, the same as a purchase market where right now we're at an all-time low? We don't have a, 30, 60, 90-day inventory of homes. Is it the same with rentals? Have you checked into that at all?
It is, apparently. I didn't know, though. I had no idea because I'm not in the rental market. So I was actually... I've been sitting on the sidelines like everybody else too. We keep hearing, everything's going to crash and, prices are going to drop. So here I'm sitting here waiting, for prices to drop. And they just weren't dropping. They were, in fact, only going up in my area anyway, Orange County.
Right.
So I had never been a landlord in California. I had some properties in Florida. But Florida is a completely different beast. So this was a new adventure for us. So we were sitting on the sidelines just watching, and this property came along, and it was a block away from our house. And that was our key thing. We weren't going to be a landlord in Florida anymore because you can't control anything. So
no, it's hard.
If we get something close to the house, great. But everything was terrible. It was terrible. And of course you're beat out like crazy, so the market's hard to purchase as well, but I think rental is worse. So here's what we did. We purchased a property. It was a 2-bedroom, 1.5 bath. It's 1,100 square feet. We had been waiting for the right property at the right time, but it never seemed like we'd find the right property at the right time. So finally we pulled the trigger at the end of March, and I still didn't feel like it was the right time because I was like, God, that 2-bedroom, 1.5 bath, paying this much for it. But I was like, I can't make this much money in the bank, so let's just do it. So finally, I didn't know even where to start. So I didn't know. How do I, where are the leases? Because I had everything for Florida.
Right.
Should
Well,
I
and
just
in Florida,
do everything
you're
on the MLS? Should I?
right.
So I was like, you know what? Before I start, let me just throw it on the MLS and see what kind of feedback I get. So I put the property on the MLS, and I got maybe 7 to 10 realtors calling me, and they were setting appointments for, 3, 4, 5 days out in the future. And then I talked to my sister, and she has rental properties, and she said, well, have you put it on Facebook Marketplace? And I said, Facebook Marketplace? I don't even know what Facebook Marketplace is. I don't do Facebook.
Right.
And she said, here, let me help you. So she walked me through putting it on Facebook, and I was like, within a minute of us putting it on there, I already had 5 things. I said, hey, is this what you normally get? I didn't even know how to respond because I didn't know how to use it. And she said, yes, that's why I told you to put it on Facebook Marketplace. So she doesn't even use anything other than Facebook Marketplace. So after one day, I had over 1,500 views. I had 100 requests for my property. By the third day, I had over 3,500 views and over 400 requests to view it. And I obviously couldn't keep up with it. Finally, I learned how to respond to the people, but I couldn't even keep up to it. And I couldn't even answer my phone anymore because it just kept ringing. So I just put it on silent. I was like, I can't even answer calls anymore. I'm just over it. So I decided, this is ridiculous. I had no idea I would be so overwhelmed with so many people begging. Begging. I don't even need to see the property. We'll rent it sight unseen. I'm like, are you crazy? No, we're not doing that. So I decided I'd do it one day. I'd show the property for one day for 1 hour. I chose a Thursday between 1 and 2 p.m. How inconvenient is that time?
Right, people are at work. Yeah. And hold on one second for me, Mary. So I do want to say hi to Grumpy Butler. He's on, he's watching, he's asking me questions. I do want to remind everybody that this is an interactive show, so please put all of your questions into the feed. We're going to finish Mary's her story, what happened with her with the rentals, because I know that there are people that are trying to get into rentals that are having a really difficult time right now. So this is very important. We're going to finish this piece, and then I am going to get to the chat. I'm going to make sure that I read those questions and I answer them for you. So don't go anywhere. Stay tuned. We are going to get to that piece of the show. So just hold tight. But Mary, I'm sorry. I didn't mean to interrupt you. I just want to make sure that the people watching know that they can keep asking their questions and they can fill up the feed for me, and we're going to make sure to get to it today.
Sure.
So so Thursday, a Thursday when people are at work, right? They've got to take time out.
To everybody. Right.
Okay.
I sent out a thing to everybody 1 to 2 p.m. on Thursday. So many people came. It was a madhouse. I stayed an extra 30 minutes just to close up the house because I couldn't get people out. They kept coming, even though it was after the time. On the spot, I had 10 people fill out applications. That night, I had 32 additional applications come in.
32, 42, now you're up to 42. Yeah.
Yeah. For one property. Come on. Within,
now, do you think, now crazy. Let me, yeah, now let me just play.
Where the crazy thing is.
Wait. So slow down. Hold on. I want to ask you a question. Just playing devil's advocate. Do you think that you had the property listed too low as far as what you were asking for the rent?
No, I don't think so. And when you hear how much money they had to come up with to actually rent the place, it'll make your head spin. So
Okay.
these people that qualified, that applied, had over 750 FICOs. They had to pay for their own application. I didn't even pay for that. They had over $50,000 sitting in the bank. They had great jobs. They had little debt. I had so many choices to choose of which tenant was the perfect one for me. I was shocked why they wanted to be in this rat race begging for rentals when they could have gone out. They can qualify to purchase a property. They can.
Oh, they can. Yeah.
They just, maybe they don't know that they can. And of course, I'm trying to rent to them, so I'm not going to tell them, hey, you should be going out and looking to see if you can buy a house.
Right,
But
right,
our
right, right.
rental
Well,
wasn't cheap. Our rental,
so
in order to get in, they had to come up with $10,900 to come in to rent
just
the
to get in the
property.
door, to get the keys in their
Yeah.
hand.
We asked for first month, last month, security, pet deposit. It was ridiculous. And I had people lining up to wanting to pay for a year. They'd pay all that plus a year's rent. And I said, no, that's not what we're doing here, That makes me a little scared when people offer that because, are you never going to pay after that?
Right,
so-
exactly. How am I going to get you out after a year? So let me ask you this. Let's back up a second because I agree with you. I do feel like if somebody can come up with with the amount that they need for rent, they have a 750 credit score, they have $50,000 in the bank, they have perfect income that you can verify, that person could absolutely get a loan.
Right.
How much is the rental monthly? So this is a 2-bedroom,
It's $3,000.
$3,000 a month,
1.5 bath.
1.5 bath. Now let me ask you the next
in
question.
Huntington Beach.
In Huntington Beach. So how much did you pay for the property? What was the actual, like if somebody wanted to go buy this unit today, and I'm not going to ask you what you paid.
$650,000.
$650. Okay.
$650. Mm-hmm.
Okay. So let's just say they did an FHA loan with 3.5% down. What are there HOA dues on the property?
There is. It's the lowest HOAs in Huntington. I believe they were there. Let's just say $350 for 3 months.
Okay.
Quarterly.
Okay. They're quarterly. Okay. So that payment, if they were coming in with 3.5% down on the property, would be a payment of about, and now I'm running an FHA payment. This is principal, interest, taxes, insurance, and HOA dues. That monthly payment would be about $4,800. So I can see where somebody would say, I can't afford $4,800. I can afford $3,000 for rent, right? I can but I can totally get that thought process.
Mm-hmm.
What they don't realize that they're missing out on is the fact that $3,000 is just thrown away. They're not getting to take advantage of the property taxes that are tax deductible, the mortgage interest that is tax deductible, the mortgage insurance that as of this year, last year and the year before, so obviously IRS can make changes, but mortgage insurance as of today is tax deductible. So what they're actually getting back on their property taxes, on their income taxes for making that $4,800 a month payment, they're probably in the zone of about $3,500 a month would be my guess. Everybody's income's a little different. Everybody's tax base is a little bit different. But
And
for an
that's
extra
just right now with our interest
Right.
rates the way they are, because when I purchased my primary residence, I took it in the shorts. Our
Right.
payment was so high, but within 6 months, our equity had gone up, and I was able to refinance, and as the rates dropped, and lower it. So right now our rates are going up, but they will turn around and go back down. So maybe suck it up in the beginning, and that's what we did. And we've never left our house since because the house just keeps going up in value. And we thought we were overpaying for the house then,
Right.
And now we're like,
Right.
well, thank God we bought it, because we wouldn't be able to afford it now.
Right, right. Well, and not only that, but the equity that's going to be gained over time, like you're
Yeah,
saying that the property's going to continue to appreciate. We know that around the corner, we're going to see interest rates, and around the corner, meaning probably within the next 12 months, we're going to see interest rates start to come back down, which is going to give the opportunity of doing a refinance to lower that interest rate as the property
right.
values do increase. Now we're not in an FHA loan. Now we're in a conventional loan. We can get rid of monthly mortgage insurance. So to give an example, and I'm going to rerun this as a monthly payment, assuming that there's, now you've got 20% equity in the property, you don't have mortgage insurance. Now that payment, and I'm going to drop the rate, right? So the first time that I
Mm-hmm.
did the monthly payment that I gave to everybody on air, I was using an interest rate of 5.625 on an FHA loan. And that's about the interest rates ish that we've been at here recently. Most people are choosing to buy the rate down a bit. And so that's kind of been an average rate. But if we go back to kind of what has been more normal, I would say over the last, say since 2017, I would say that an interest rate of probably about 4% to 4.5%. So let's go 4.5%, assuming no mortgage insurance. Now you're getting to refinance. That monthly payment now with principal, interest, taxes, insurance, and the HOA, so the whole nut all in, is now 35.27. So now
Yeah.
you're there, right? And that's
Mm-hmm.
exactly what you were saying, Mary, is that you've got to start somewhere. You've got to obtain the home ownership. You are getting the benefit of for your income taxes of those deductions, which is going to give you a bigger tax return at the end of the year. That bigger tax return you can help, to put towards, those payments. But then as soon as things do start to move and those interest rates come down and those property values start to go up again, you're going to be able to do that refinance. And now you own it. Now you own it.
Right. The key,
Eh,
though, is people should get qualified. Even if you don't get a loan now, find out what you can get, what you can do, because if you finally find a property that you're ready to pull the trigger on, and if you haven't gotten all the documents to the lender to have them pre-qualify you, you're going to lose out because nobody's going to sit and wait for you to get all the qualifying documents in with your offer. If you
Right.
don't put an offer, if you're not one of the first one or two people that put an offer in, they're not going to wait for you. And you won't end up getting that property if you are looking to buy. So
Right.
they should, even it is a lot of work to get all the things, to get everything in so that you can get your,
Pre-approval.
what you can really qualify for and find out what you'd be comfortable with. And mind you, I wasn't comfortable with my payment when we first did it
Right.
at all.
Right.
But it pays off. So, if you, put the hard work in, it pays off in the end. And,
Well, for
that's,
sure. And
that's really the key.
well, and then the other key too, right, is that you are the $3,000 a month that somebody is paying you right now for that rental, for their monthly rent. They're just throwing that money away. So I get it that they like Huntington Beach, that's where they want to live. But, I lived in Orange County for a really long time. That's how I met you. That's when we became friends. And,
Right.
there are condominiums right now that you can look at a little bit more south in, Lake Forest that you can get into
True.
for much less than what you'd pay for Huntington Beach. And although maybe
Right.
Huntington is your excitement spot, owning the property is so much more important. So if you can get into something for $400 or $450, you can get that same monthly payment. You can own that property, and then once you've saved up a little bit more, maybe your income is starting to move, maybe interest rates have come down, you can refinance that Lake Forest property, you can get that payment down lower, you can rent that property out. Now you've got a
what people are
stepping
doing?
stone. Yeah.
To help, they're actually renting out rooms. So they're
Yeah.
purchasing properties and renting out rooms to supplement because they can charge, like, I think it's $1,200 to rent a room, one room, and a house.
Right.
So,
Yeah.
I mean, if you want to have a stranger living in your house, but I'm just saying that actually is what is happening right now because they can name their price. I
Right.
could have named my price. I started thinking, God, did I underdo it? But I don't think so. I feel like I would
You
have a
feel like you
guilty
were fair.
conscience.
Yeah.
Yeah, I would
You-
have a guilty conscience if I had put it on for like 4,000 but mind you, the property is pristine, new kitchen, new bath, new floors, new blah 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 blah, blah. And it's very nice. Um, so I mean,
I-
that part is was an easy sell. But there's
right.
nothing on the market for anybody. So even if it's a dump, they're getting 3,000 for a dump.
Yeah. Well, and that's
There
and it,
and everywhere. Everywhere
yeah.
it's tight on it. Even the Inland Empire is having a hard time with rentals. It doesn't matter. Everybody.
Right.
I don't know why
Right.
everyone's renting when you could, it's like a savings account. By purchasing, it's like a savings account. It's kind of like a forced savings account, mind you, but at least it's some form of savings account. Even if the value goes down, within X amount of time, that value is going to go back up.
Yes.
It's never going to stay down. And actually, at least you have an asset versus if you're putting in your money in stocks and bonds, which is supposed to be crashing soon too.
Yeah.
It's only paper. Everything's
Right.
paper. So at least
Right.
if you purchase in real estate, and that was my thing, at least if I put my money into a property, I have a tangible asset.
It's
And that,
it's a yeah, no, it's a
that
big
was
thing.
my
And
security.
yeah, no, that it's a very big thing. And that's why,
It'll
again,
never be worth nothing.
it'll never be worth
nothing.
nothing. And even if it does crash, it will always come back up and it will exceed the
I can always
time where
rent
it
if
stopped the
it's worth
time before.
nothing.
Yes. And still make money because people
Still
have
make
to
money.
rent. Right. Like
Yeah.
it
And
doesn't
it becomes
even
my passive income for
Right.
retirement.
right. And even if
And
property
you can't
values
make that
drop,
money in the bank.
nope. Nope. And even if property values drop, the rents are going to hold and the rents are going to continue to go up, right? Because the next
Right.
time you leased it out for 12 months, right? But in 12 months, when that contract is up, you can choose to increase the rent. Here in California,
Right.
you can increase it by 5% if you want. But you can
Right.
choose to increase the rent if she wants to stay. You can say, no,
You know
thank
what
you so
people are
much. You're
doing?
great.
Do you know why the market is why we're so inundated? I did find out a little bit of information by asking
good.
people why they're moving and whatever. So some people, they're moving back. So they moved away from California, sold their properties at a premium. They moved to Texas, Tennessee, Idaho, Utah, all these different places. Well, sometimes when you move to places, you don't realize that, hey, you're in Tennessee and for 4 months you're under tornado warnings. That was one of
Right.
the ladies. She's like, I just have to get out of here. It's been 4 months of Tornado Alley and I can't take it anymore. And, Texas, I never knew Texas was going to be all these bugs and blah, blah, whatever. So there's all
Right.
these people moving back. But not only that, there's people who have been landlords and were raked over the coals from
During COVID. Mhm.
where you couldn't kick your people out for not paying and whatever, and they got so stressed out. So now they're like, you know what, you guys were good through the pandemic and all, and things ended up working out, but we're gonna sell the property because
Right.
they're like, well, we don't want to be landlords anymore. We don't want to deal with this. We don't want to anything. So we've got some people who are moving their tenants out. They're nice about it. They're giving them like 2 or 3 months. So they've been searching for 2 or 3 months and still haven't found anything.
Right. Right.
But they're like, we're going to be renovating this house, so you guys got to get out. So there's
Well,
a
and-
lot of people doing renovations.
Yep. That's what
and
I
then
was going
gonna
to say.
sell.
Yep. Or they're going to renovate and then they're going to rent it for more because now it's fresh,
Right.
it's clean, it's done, it's ready. Yeah.
And since you can only raise your rent to 5%, they now can raise it probably double, triple what
Correct.
they were renting it for before.
Right.
So
Because
they don't
it's
want long-term tenants. You have
Nope.
no security if you are a tenant. You have none. They can kick you out after you're on your month-to-month. They only have to give you 30 days notice.
right. Right.
So
Yeah,
you have no
really
control.
Yeah, I hope that people are hearing us talk. I hope that, if they're a renter right now in a property or if they're out searching for a rental property, that they're hearing what we're saying and that they're understanding it. I don't ever, I don't sugarcoat anything. I tell it how it is. So I wanted to make sure people could understand that this $3,000 a month rental with very, very minimum down payment. So trying to kind of compare to what you would pay, with, very, very small down, right?
10,900. Yeah,
Right.
10,900 to then continue to pay 3,000 to me.
Right. And I get it. The payment would be significantly higher. You're talking $4,800 a month, but I want to put everybody into check and a little bit mom rant and say, but you need to buy something and you need to own something. So maybe your little booty can't be in Huntington Beach. Maybe your little booty
Right.
needs to go somewhere that's a little bit less
Right.
expensive, or you need to talk to your CPA or your tax advisor, whoever it is that does, your taxes for you, and say, hey, what would my refund look like if I actually paid this much per month? And this is what my property taxes were per year, and this is what my interest was per year, and this is what my right, and what
Don't
would my
they still
refund?
have those- Yeah. I mean, the benefits of it.
Right.
You have a front end and a back end benefit, but
Right.
don't they still, like, if somebody was to buy a fixer, aren't there loans for them to help fix up the place, which would then add value to the property as well?
There are.
like-
We've got renovation loans with FHA. It's called a 203K. We've got renovation
203K,
loans.
that's it.
We've got renovation loans with Fannie Mae. Those are called
So there are things that can help them not to have to live in a dump. They could actually buy something and still get it fixed
Right.
up and then live in it and then wait for it to gain more value. And
correct.
Yeah,
Correct.
there's-
Yeah.
but if they talk to you and call you guys have all the solutions. That's why I love working with you. You do all my stuff. You guys have ideas outside the box, and not a lot of lenders and loan officers know how to work through problems. Like, I think you've dealt with almost every single problem that is out there. I used to be an escrow officer,
Yeah.
and we're problem solvers, we're fixers. And that's why we get along so well, because you're a fixer. You make it happen. You figure out how to make it happen, and you're like, this is what we need to do. This is what we need to do, and it's
Right.
it's fantastic. And that's why I love tuning into your show, because you read all the articles and put all the stuff together and find out who's swaying which article which way, and give us just the hard facts and say, hey, I'm telling you what I see, and look up the facts for yourself. But I appreciate not having to look up the facts myself. It's very time consuming.
It
So
is,
you're
but
fabulous.
oh, Mary, thank you so much. And so Grumpy Butler actually gets on and he says the hard thing for someone like me is putting together a down payment, let alone a higher down payment. So Grumpy Butler, that's kind of what we're talking about right now, is that this person that was that ended up moving into Mary's place, that rented out the condominium that she purchased, ended up needing about $11,000, $10,900 to get into this purchase. And what I'm trying to give you guys is the reality check that could actually get you into a property. We've got down payment assistance programs. We have CalHFA. We have what's called another program called Essex. We have another program called Golden State. It's the Golden State Authority. And there are other down payment assistance programs as well. And many of those programs, people think, well, I'm going to make too much money, I'll never qualify. CalHFA actually has some really, really lenient guidelines on the income qualifications. Now, I'm going to back up a little bit, and I'm going to say that I read your earlier comment because he has a question about whether he's a first-time home buyer and an inheritance. And so I'm going to get to that in a second, but he is in Washington State. So Washington State does also have down payment assistance, not CalHFA. That's a California down payment assistance, but our Essex program could help you in Washington. And there are others that we can look into for you. What you really need to have is enough money to just cover your closing costs, which are usually about 2% of your sales price, sometimes a little bit less. Sometimes you can get the seller to pay those closing costs for you, but assuming the worst case scenario that you can't, 2% of 500,000 is 10 grand. So if you have the same money
pretty
that
good.
you would need to utilize to get into a rental property, there is a very, very good chance that we can get you into a home that you can buy something. Maybe you got to go a little bit outside of your area. There's a lot of areas, Huntington Beach is expensive. Mary, Huntington Beach is like, right
It
next
is.
door to Newport Beach, right? But in most areas throughout the United States, purchasing a home versus what you pay in rent is not as extreme of a difference. And even in that extreme that I gave you guys that example, once the interest rates come down, you're going to be very, very close to the same as what you'd pay as a rent. And not only that, but you've got the tangible asset like Mary mentioned, and you've got all of the tax savings like I mentioned, which does help subsidize. So like, let's say, for example, that your refund might change by, you get an extra $10,000 back at the end of the year where you were getting nothing back before. That's an extra $833 per month if you put it into a bank account and then you just give it to yourself once a month. That's $833 a month. That's going to help you to subsidize that higher monthly payment for the mortgage. And you own the place. And like Mary said, you've got no stability in a rental. So, I
get
again,
qualified. Find
Yes.
out what the max you can afford. Get qualified. That's key. You can
It is.
do all these what ifs. Oh, what if I only have this? But the best thing is, you'll evaluate everything that they've got, what they've got in their bank accounts, what they've got in, if there's, if somebody has an inheritance, whatever, you'll check everything out and find out what they really can qualify for. And then they can look and see what properties fit that,
That
price
bucket.
range for them.
Yeah.
Mhm.
Yeah. Absolutely. And like I said, I mean, maybe the price range isn't the same as the rental, but there is a price range and you've got to start somewhere and you need to buy something, which is going to be the stepping stone for you to buy the next
Even if
one.
it's on the lower end, it doesn't matter. It's still going to go up in value.
Yes. And it is
And
yours.
even
And
if
then,
you don't
yeah.
sell it, you can then make money on it as a rental, as it's your stepping stone to get into the next thing. Because
Right.
now you can qualify with that income on top of your income.
Right.
So, but if you
Mary?
don't own anything ever and you keep being the renter, it's going to make me rich.
It definitely is. It definitely is. And I hope that we're driving this point home. And, you guys, the best thing that you can do is, like Mary said, is to pick up the phone and call our office. Now, Mary, you were actually really sweet to say, Debbie has seen just about every problem and we think outside the box. And so I'm going to be honest with you. I see something new every single day. And I have been doing this for a really long time.
Yes, you have.
Yes, things are forever changing. Every single day there is something new. Every single day there is a different scenario. But yes, I've been doing it for a long time, and we can definitely put our critical thinking hat on, and we can definitely come up with a solution. And if there isn't a solution today, then we're going to give you the tools and the roadmap to the solution for tomorrow. So
And that's
you've got
true.
it. Yes.
You really do that. You really do. You give somebody a path to figure out how to get to that destination of being able to purchase something. So there has been people with really bad credit that 6 months down the road, we have finally seen them,
Yes.
be able to purchase because they made the choices to follow what you told them to do. That
Right.
has happened.
I wish I could get everybody to listen to me all the time.
I know. Yeah, but sometimes, it's hard to make change. But if you can make the change and it's a good change that from somebody who knows what they're talking about. If this isn't the industry that you're in, you need somebody who knows what they're talking about and deals with this all the time. You don't have to be a professional if you have a professional working for you. That's the key.
Mary, how do I
You have
get
a
you on
job.
my marketing team?
Well, that's just it. That's just the way it is. You can't be a professional in everything,
Right. No, it's true. And it's hard, right? You kind of get stuck in this mindset of like, well, I don't have the down payment. Just like, Grumpy said, I don't, it's hard for me to come up with the money for the down payment. But if you don't know
There's
what
some
you need,
Yeah, there's assistance too, depending
Right.
on what you can qualify for. you
right.
know?
Eh,
And unless
yep.
you put all your stuff in and get evaluated, you don't know what you can qualify for down payment assistance.
Right. Absolutely. Mary, you have been wonderful. Thank you so
Oh,
much.
thank you.
I can't
Okay.
I cannot get over the 42 applications, 400 views, 1 hour of showing.
Shock. I was shocked, honestly. That's why I had to call you. I'm like, Debbie, this might be something that you want to add because this is crazy. And they
Right.
can qualify to purchase.
Yeah.
They can qualify
Yeah.
more. At least 80% of the people that applied could qualify, could purchase. I mean,
Yeah.
maybe they
Well,
couldn't have purchased this property, but they could have, they could
They
still
could
get
have
a
purchased
condo.
something else. Yes, they could have purchased
Yeah.
something else, and they could have owned it, and it could have been theirs, and nobody's going to increase the rent or not
Right.
re-up the lease so that they can now turn around and release it for more to the next person. It's just
Right.
the stability has so much to say about it. The tangible asset has so much to say about it. Purchasing is really where it's at. And
Right.
again,
It really is.
and most people just don't even know. They assume that they have to have a 20% down payment, or they assume that they have to have a certain kind of income, or they assume that they have to have a certain kind of credit. That's just not the case, and you need to stop assuming and actually pick up the phone and talk to us to find out. What is the worst thing that we're going to say? No,
You don't qualify.
right. I mean,
qualify.
and
So here's
and
what
it's
you need to qualify. At least you don't just say no and that's it. You'll actually tell them and give them a plan to figure out how to set themselves up in the future.
right.
I mean, you at least give them the building blocks that they need, way more information than anyone else is going to give them, and take the time to explain it. Because this stuff, if you don't do this every day, it's very hard to understand because the
Yeah.
terminology is not what normal people are used to.
It is not. It is not. My girl was getting me all ready this morning, putting on my makeup, doing my hair for me for the show, and she heard me and Heather actually talking. I put Heather on speaker so that I could talk to her while multitasking. And she actually, I hung up the phone. She's like, "You guys are so funny. It's like you talk a completely different language."
Mm-hmm.
We're talking
no,
LTVs and CLTVs and FICO scores and DTI and second
Right.
home and LOEs, and she's like, I didn't even understand what your conversation was, and that's what the important part is that you need
And
to
people
work.
don't want to feel dumb and
Right.
be like, because somebody says, "Oh, do you understand?" You go, yeah. And then you never want to talk to them again. At least you guys explain what these things mean.
Yeah.
In this industry, people name fire insurance, home insurance, hazard insurance. They're all the same thing, but we
Right.
name them all 3 different things. Why?
Right.
confuse people?
Escrow,
I have no
your
idea.
escrow and escrows and mortgage
Prelim,
insurance.
title report.
yeah.
Come
yeah.
on.
Yeah.
Really?
Yeah.
It doesn't have to be that difficult. And you guys make it very simple. Tell everybody you need to do A, B, C, D, and then we'll tell you what you qualify for and whatever. And if you don't qualify, this is what you need to do. 1, 2, 3, 4. To be able to
Yeah.
qualify
To purchase.
for a loan.
Yeah.
And it's people can qualify. They just are afraid. Maybe I think. I don't know.
Yeah. Yeah. I don't either.
Fear of the
I don't either.
unknown. I think it could be fear of the unknown. Nobody
And
wants to
change.
be rejected, right?
Yes,
Nobody wants to
yes.
be turned down or rejected. Oh, you don't qualify. You don't. Maybe
Yeah.
that's what it is. They can't take rejection.
Yeah.
But
It's
if they don't try, you don't know.
Yeah, if you don't try, you don't know. And if you do try and you find, you might be pleasantly surprised. And if you hear the answer that you expected the whole time, then okay, but you still have a goal, right? So if somebody calls me up and says, I make money, but I don't claim it, I can't show it on paper, so I know I can't get a loan. Okay, no, you can't get a traditional loan, but did you know that
Right.
if you have 20% down, that we can get you a loan, even if you can't show
Right.
any income, period, end of story. Hey, can you show me your bank statements? Did you know if you could show me your business bank statements for the last 12 to 24 months with 10% down, I could actually get you a loan? People don't know those things. And so they just automatically assume, no, we can't do it, can't
Right.
do it, can't do it. When in reality, there really might be a yes, you can. So worst case scenarios, you hear what you expected, but you've got at least a plan. Hey, save some more. Hey, go get a cosigner. Hey, and we're going to talk about that. That's
See,
worst case
you've got
scenario.
the ideas. See, you're
Right.
the idea person, and they don't know. So that's why you get a little hiccup. Oh, I have this judgment, against me for this or whatever. And you can come up with a solution. Here's what we do with judgments, blah, 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 blah. People think, oh, because I owe on these things, I can't get loans. But you can.
Right.
You just have to,
Yep.
pay them
Yep.
off or do, different things, whatever
Absolutely.
it is.
IRS
depending on
debt,
what
make sure IRS debt, make sure you just get yourself on a payment plan. You're making your payments on time.
Right.
So there's a lot of things that we can work around, figure out how to do it. And again, if you don't call, you don't ask, you don't know. So you're not taking the
Right.
steps to get prepared to be able to buy. So no, I agree with you, Mary. I can't believe how crazy that the rental market is. Your story was only one of
Crazy.
many.
Right.
Of many that I have heard recently that are that same
It's
direction.
really sad. People are crying. I'm like,
Yeah.
oh my gosh, I can't take this.
Yeah, begging and
it was
pleading with
terrible.
you.
Begging and giving me every sub story you can imagine. But the crying thing really got me. I was like, I'm so sorry. I gotta go. I don't know how to handle it.
Yeah. Yeah, that's hard.
Because I definitely, if you're, yeah.
Yeah, well, and at the end of
Anyway.
the day, if you're the landlord, right, and you've got 42 applications in front of you,
Mhm.
you
within
get
a day. One
within
day.
a day,
1
within
hour.
1 day. Yes. And but
Absolutely.
you're obviously going to choose the tenant that you feel is in the very best position to make sure that you receive payment and that
Right.
they're not, there's not going to be any damage to your property. And for whatever all of those reasons are that you select the one that you select, you really you get to choose the cream of the crop. So
Right.
if somebody had, if they're crying and say, I have nowhere to go, and you really, really liked them, but they've got a 630 credit score and they've got some collections on their credit report, they're probably not going to be the person that you're going to select to be the tenant. But hey, did you know that we can do a loan for somebody with a 630 credit score with some collections on their credit report? A lot of people don't know that. So you might
That's
actually
what
have
they don't know.
Right. It might actually be easier to get into a property, to purchase a property, than it would be
Yeah,
to try to
than
find
to
a
rent.
rental. Yep.
Honestly, 1,000%. Yeah.
Yep.
I
Absolutely crazy.
because no landlords right now are wanting to rent to anyone. You have to go to an apartment complex, and even the apartment complexes have lines of people waiting to rent their places. But
It's absurd.
that's like the only chance that you have, unless you get some old lady who doesn't even pull credit and whatever. But most of people aren't like that anymore. They're pretty savvy.
They are. They're using property management companies that are doing all of the background check for them. Yeah. I mean,
And they're not
it
taking
is.
anybody with bad credit. They're like,
No.
it must be excellent credit. So
Right.
you have a better chance of purchasing a property than you do renting.
Yep. Yep. Absolutely. Mary, you've been phenomenal. I'm going to let you go. I'm not going to keep you on
Oh,
any
yeah.
longer, but thank you so much. Really.
You're
it was
welcome.
great.
Thanks for having me on. Have a good one.
No, I'm going to get you on my marketing team. I love it. I love it.
All right. Take care.
All right. Thank you, Mary. All right. Bye-bye.
Bye-bye.
All right, so you guys heard it. So I am going to actually take a very quick break. Then when we get back, Grumpy Butler had a question for me at the beginning of the show that is about inheritance and a first-time buyer. So we're going to read that question. I'm going to answer it for you. This is an open conversation, guys, so please feel free to put those questions into the chat. More than happy to read them and answer them for you. If you guys want to call Mortgage Mom Radio, if you want to know, is there a chance that you could buy a property and get out of renting, out of throwing away your money, all you got to do is pick up the phone, give us a call. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Or head on over to the website. It's mortgagemomradio.com. Don't forget the radio. I have gone through the whole trademark process on Mortgage Mom. Nobody is supposed to be using the name Mortgage Mom. A ton of women do. They still use it. But I am the one and only and the real trademarked Mortgage Mom. But you've got to put in radio to make sure that you are at my website. So it is mortgagemomradio.com. With that, stay tuned. When we come back, I'm going to get back to Grumpy Butler. Hold tight.
Hi, this is Carrie Young with Mortgage Mom Radio. Did you know there are multiple home loan options available with little to no money down? Whether it's conventional, VA, FHA, USDA, or down payment assistance, Let us find a loan that's right for you to get you into a home with minimal out-of-pocket expense. Give us a call. That number is 844-935-3634. That's 844 We Lend for You. That's WELEND and the number 4. Or visit our website. That's mortgagemomradio.com.
All right, I want the attention. I am calling out to all my sneakerheads, my hat men, my Funko Pop guys. If you like collectibles, if you like sneakers, all the Nikes, Jordans, Adidas, Asics, New Balance, if you are digging on those baseball caps, all those My Fitted, Sports World 165s, the hat clubs, all the great styles and brands, we have got them at runawaysoul.com. We have got the best pricing in town. We match those of the big sites like StockX and GOAT and eBay, but we don't have any seller fees. Everything we carry is guaranteed authentic. We have free shipping and it's fast. You're talking a couple of days to get your product. So run on over there and check it out. It's runawaysoul.com and make sure that you use one of our discount codes for even lower pricing. Once again, that's runawaysoul.com. All right, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom. Gosh, that felt good to take those earbuds out of my ears. I had to have them in so I could hear Mary's phone conversation, but they were killing me, so I'm so happy to have those out. I took those out during break. But welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and today we were talking about rentals, rental properties. You probably could buy a house if you just pick up the phone and you'd give us a call, so that is something you should definitely explore if you are currently a tenant or if you are out looking for rental properties. What is the harm in at least just picking up the phone, calling and finding out what would a payment look like? How much could I qualify for? How much money would I need? That is what we do here. We educate, we help, we give you the plan, we tell you what you would need, and you might be very pleasantly surprised that this is your time to buy, your time to shine. So please do that. But we did have a question from Grumpy Butler. You guys can't see his questions. It looks like he's the only one that is actually watching me on Twitch, which is so exciting to actually have a follower on Twitch. One of these days, I'm going to get those gamers jumping in and watching me and buying homes with us. But he asks, if someone who never owned a home inherits a condo, they want to sell it and get a home, do they still qualify for first-time home buyer? I am in Washington State. So it doesn't matter what state you're in. This is going to apply across the U.S. They're all Fannie Mae, Freddie Mac, FHA guidelines. The guideline is that if you have not owned real property within the last 3 years, then you are considered a first-time buyer. So your question actually gets a little bit sketchy because it depends on what happened with the inheritance. So sometimes a property is held in trust. So let's say that, grandma had a property and it was held in the trust. And in the trust, she says, hey, you're going to inherit this property from me. The property, the actual title of the property never got moved over to you. It is still sitting in the title of the family trust. You sell that property. The trust is basically selling that property. You never actually had home ownership, which means that you would still be considered a first-time buyer. However, if the trust transferred the title to you and you are now the owner of the condo, you are no longer a first-time home buyer. You actually own real property. You are the owner of title of record of that condominium. Now, a lot of people think that this first-time homebuyer thing is a big deal. And so let me just back up on that one for a minute because it's actually not as big of a deal as you guys think that it is. Number one, a first-time homebuyer, for many of our down payment assistance programs, you do have to be a first-time buyer to get that assistance. But if you are not using down payment assistance, you have 3%, 3.5%, 5% down payment, you do not need a first-time homebuyer title. It's not necessary. You can get an FHA loan even if you've bought a house before. You can get an FHA loan even if you still own a home. There are some down payment assistance programs that don't require that you are a first-time buyer, but they do require that you don't own property. So if you own a house today and you're selling the house and then you want to go buy another one, that's okay, but you can't hold on to the one that you have. But the first-time home buyer thing is not really that big of a deal, guys. It truly isn't. Yes, it's going to open you up to a couple couple of additional maybe perks or programs, but there are so many programs out there that it's not really a necessary thing, and we can still get you in with something that's very low down, something with a great interest rate. You can still purchase a home even if you don't have that title of being a first-time home buyer. So Grumpy, I hope that I answered that question, but please feel free to elaborate if you have any further questions or you want to ask about something that I just said. Please feel free, put it into the chat. Happy to do that. Heather had jumped on at the beginning of the show, but I already had Mary going with her conversation about rentals, and she says, hi, everyone. And hey, my dad jumps on and says, howdy. So howdy, Dad. Thanks so much for watching. Appreciate that. I just want to remind everybody that this is interactive, and if you guys want to know when I go live, you've got to text the word MOM to my phone number. It's just MOM to my phone number. So it's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Text the word MOM. It's MOM forward and back. Just don't turn it upside down. Wow does not work. But it's just MOM. Please don't write opt me in. Please don't write subscribe me. It's literally the word MOM. That is it. MOM. That will get you one text message a week. I typically put in the text message what we are talking about that day. So maybe if it's not something that interests you, then it's not something that you even have to tune in for. But if it's something that you go, hey, that's a great thing, I need to know about it, then you can click on the link and it joins you right to our YouTube channel. And you are going to watch the show live. You get to ask your questions live. You get to get answers. So it's really a cool thing for you guys to opt in. We are streaming on Facebook, Twitch, and YouTube. So obviously you guys can either subscribe or like or follow the channel depending on the platform that you guys like to watch on. So that is fine too. But I do find that you get your best notification from getting the text message from us. I promise I don't spam. I am not going to send you guys messages about buy now, here's a house for sale, hurry up and, call for this thing. We don't do that. We're not selling your information. I have never once ever given anybody a list of anything, any client who has ever come across my desk or been part of, part of my office. That's just not something that I do. We just want to let you know that we're live so that you can join and you can be part of the show if you'd like to. So once again, you would text the word MOM to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Now, I do want to say something. Many times I will get actually questions to the text number. So people text me to the 844 number. This is not a monitored chat. So I do want to make sure that you guys know that. It is actually not monitored. It is just literally to get you guys the notification that we went live. That's it. So if you do have questions and you're not quite ready to pick up the phone, but you want to get some answers, you can do two things. You can go to mortgagemomradio.com and there is a contact us button where you can send me an email. And yes, me, the mortgage mom, gets the email and I will respond to you. You can also send us an email directly. So you can send that to questions with an S, questions at mortgagemomradio.com. That also comes to me and I also answer those emails. So that would be the very best way. Many times you guys ask questions that are a little bit too complicated to try to respond by text. It's just too long. It's just not the same as being able to truly give you guys the information that you are looking for. It is much, much easier in an email. There are times that I get emails where the question is pretty elaborate and it really might benefit to just pick up the phone and have a conversation. If that is the case, I am going to respond and say, hey, is there possibly a good day and time, that we can connect, that we can pick up the phone and talk to each other, because I've got a lot of questions from your one question before and give you that answer. But please don't hesitate to reach out, ask the questions. That's what we're here for. We want to help you. We want to make sure that you have what you need, that you get what you're looking for, and that we get you moving in the right direction. That is the ultimate goal here at Mortgage Mom Radio. So with that, if I don't see anybody else with any other questions today, I hope I drove home the fact that it is so important for you guys to purchase a home. You might not be able to buy in the exact area and location where you want to be, but the opportunity of homeownership is there, and that is so much more important than living down by the beach next to your favorite bar. So anyway, so give us a call, talk to us, you guys. If it's the weekend, please remember, we answer the phone all the time. If you are calling on Saturday and Sunday, we welcome it. We open it up. We want you to call, okay? But if we are on another call, it will go to the general voicemail box. That is okay. Leave a message. We are going to call you back within just a couple of hours. Sometimes you're going to get a call back in 10 or 15 minutes. Sometimes you'll get a call back within an hour, hour and a half. It is Saturday. It is Sunday. Me and my team do have families, and we've got things going on and things that we're doing, but we always check those messages. So we are live when the show is running. We are there ready to answer those calls during the radio portion when the show runs on Saturdays. And if we miss that call, that is because we're on another line. So leave that message. We'll call you back. If you're calling us Saturday at 2, Saturday at 3, Sunday at 4, we are going to call you back. Just realize that we need to get to the message. We need to hear it. We need to get to a spot where the kids aren't yelling. We've got a little bit of quiet, and we're going to pick up the phone and call you back. So please, you guys, if you get the voicemail, please leave a message. Many of you call and then you hang up because you didn't get somebody that answered right away. We can't call you back if we don't know who you are. So please just make sure you leave a message, and I promise you that you will get a response. So with that, it's the end of the show. It is Wednesday. I will be back again next Wednesday, same time, Pacific Standard Time, right around 1 o'clock. Today we started about 1:15. And if you want to be part of the show, you want to watch, you want to ask your questions, you want to see me do it live, and you're listening on Saturday by radio, you got to text MOM to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Or just pick up the phone and call that number. If you call that number, you're going to get us and let us answer those questions for you right away. I hope you have a good one, and I'll see you guys real soon.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.